EIN Changes, what to do when business ownership shifts. Have you ever wondered what happens to your employer identification number when your business ownership changes? It's a common question, and understanding the rules can save you a lot of hassle. When ownership of a business shifts, the employer identification number generally cannot be transferred to the new owner. Instead, the new owner usually must apply for a new employer identification number. This is because an employer identification number is assigned to a specific business entity and its structure, not just to the business name or assets. So, what does this mean for you? If you sell or transfer your business, the new owner must obtain a new employer identification number to comply with Internal Revenue Service rules. This is essential for ensuring that the correct legal entity is responsible for tax obligations. There are specific situations where a new employer identification number is required. For example, if you sell your business, form a new partnership, incorporate, or undergo statutory mergers that create a new entity, you will need a new employer identification number. However, if you are simply changing the business name, moving to a new location, or adding new locations, you do not need a new employer identification number. Now, there are special cases to consider. If a sole proprietorship is inherited or sold, the new owner must get a new employer identification number. On the other hand, if a limited liability company remains the same legal entity but ownership interests change, the employer identification number can stay the same. In this case, the responsible party must be updated with the Internal Revenue Service using Form 8822B. Updating the responsible party for an employer identification number is straightforward. Just submit Form 8822B to the Internal Revenue Service. This form notifies them of the new individual who controls, manages, or directs the entity and its funds. Legal and tax compliance is vital during ownership changes. The new owner should notify financial institutions, update payroll and tax accounts, and ensure all legal documents reflected the change. For Asian American business owners, knowing these rules can help avoid confusion and ensure smooth transitions when ownership shifts. Many Asian American entrepreneurs run small to medium-sized businesses where ownership changes might occur due to family succession, sales, or restructuring. Understanding when a new employer identification number is necessary and how to properly update the Internal Revenue Service can prevent delays in tax filings and payroll processing. When ownership shifts, here are some steps to follow. First, determine if the business entity itself is changing or if only ownership interests are changing within the same entity. If the entity changes, such as in the sale of a sole proprietorship, new partnership, or incorporation, apply for a new employer identification number. If the entity remains the same but ownership changes, like in a limited liability company membership transfer, file Form 8822B to update the responsible party without getting a new employer identification number. Finally, notify all relevant parties and update legal and tax records accordingly. Following these steps will help ensure compliance with Internal Revenue Service regulations and maintain smooth business operations during ownership transitions.